Hey everyone, I'm Jin Xiang, and today I'm going to talk about the digital banking licenses as announced by MAS. On June 28, 2019, MAS announced the issue of up to 5 digital banking licenses, which includes 2 digital full bank licenses that provides a wide range of financial services, take deposits from both retail and non-retail customers. In addition, the license includes 3 digital wholesale bank licenses that aims to serve the small medium enterprises, SMEs, and other non-retail segments. Hence, the implementation of the new digital banking licenses shows a great advancement in the Singapore's banking liberalization journey and helps to ensure that Singapore's banking sector continues to stay strong and competitive. A digital bank is the full digitalization of the bank and its activities, programs, and functions for both the front and back-end development. With this, there's no need for physical bank branches since a customer would be able to manage his or her finances with the availability of the different financial services such as mobile application or websites. Furthermore, automation helps to digitalize a bank since it provides consumer with new, existing, and enhanced products and services. The first problem is the underserved segment. MS is trying to help the underserved segment of the Singapore market. The applicants of the license have to show that they have the ability to provide a clear value proposition of how it can serve the underserved. For example, incorporating the innovative use of technologies that differentiates from the others. This will also influence other existing banks or companies to think of methods to incorporate into their business to reach the underserved. Thus, the underserved segment will be served as more companies and banks will be open to them. Next is risk in digital banking. MAS has implemented a set of guidelines for registered applicants to mitigate the risk in digital banking. The applicants have to prove that they comprehend the key risk in a banking business and the strength of its regulatory compliance and risk management plans. Other existing banks may also be urged to innovate new or improved plans to reduce the risk of digital banking in their own business operation. Task. The risk in digital banking can be mitigated through the different types of risk management plans that the applicants and banks have proposed. A sustainable digital bank business model indicates that the bank is utilizing its customer interactions, products, processes, and data around digital technologies. A successful bank is attractive on the user interface and is also digitally efficient on the back end. Usage of mobile and digital technologies will lower cost to serve. Simultaneously, these technologies are used to improve high-touch services. The license will only be issued to a company when all requirements from MAS are met. So, if the license is issued to a company, it shows that the company is able to fulfill all the requirements, and that the company has the capability, knowledge, innovation, and resources to address all the problems faced, as mentioned earlier, in a distinctive, effective, and efficient way that differentiates from the other existing banks. One implication would be that the digital bank is not customer-focused in doing their businesses or doing businesses that only benefits them. For example, unreasonable business plans and financial projections. That may include discrimination of a specific segment, like only targeting the served segment and not the underserved. Another implication is poor risk management plans, where a company has a low level of understanding of the key risk, and the risk management plans created does not help cover or mitigate the risk. So what are the advantages of digital banking to banks? First, lower operating costs, such as elimination of costly back office operation, few or zero errors, and fewer branch footprints, meaning minimum number of staffs would be required. Next is dumping legacy system. Makes no mistakes. Basically meaning that if they still uses legacy system and if there's a change in it, the cost of changing will be huge. So what are the disadvantages to banks? First is security. Since it is digitalized, hackers are able to hack into the bank system and steal the money and personal information of their clients and customers. Next is reputation may be affected. If the digital banking system has bugs or glitches, customer will be unhappy about it and will speak badly about the company or bank. So what are the advantages of digital banking to clients? First is convenient. They do not have to go to the physical branches and can just do it online, and it also saves time and money. Next is 24/7 availability. One is able to check his or her bank records, transactions, and use financial services anytime and at anywhere. It also prevents any suspicious activities if they check regularly. So, what are the disadvantages of digital banking to clients? First will be security, as mentioned previously. Since it is digitalized, hackers are able to hack into the client's mobile phone to steal their information and money. Next, technical glitches. From time to time, there will be glitches in the system, and it may be frustrating to the clients, as the application or websites will be under maintenance, and no one will be able to access into it to do their online banking activities during that period. The financial services industry in the near future for both Hong Kong and Singapore is aimed at increasing competition between traditional and virtual banking. In Singapore, larger local banks are not affected much by the issuance of the licenses, as they have been investing greatly in their digital offerings over the past few years. The ones affected the most are the incumbent banks, as they do not really serve the underserved segment due to the lower profitability and higher credit risk. Thus, incumbent bank might fall out in the long run, as the underserved segment will become an attractive and profitable segment with the help of the digital banking licenses. The long term of financial services industry in Hong Kong aims to form part of a larger unbundling story in the banking sector, meaning that consumers will be able to handpick specific services that works well for them. However, in Singapore, the long term of financial services industry is to promote innovation and encourage adoption of technologies for increasing efficiency and creating opportunities in the financial sector. Value disruptive competition is when a company destroys the value of an established company, causing the established company to lose all their value and be replaced by the competitor who gains the market share. For example, the entrance of internal combustion engine destroys the value of horses for pulling carriages. If a bank were to gain market share through value disruptive competition, the financial landscape will be negatively affected, as instead of improving the financial sector, it destroys the value of others. It may also imply that MAS is not preventing unsustainable banking practices and is not preserving a level of playing field among banks, which means unfair. For example, business volumes and profitability of a company will deteriorate significantly, thus placing the company on the verge of collapsing. Deja vu, I just been in this place. In conclusion, the prevalence of the escalating trend in adopting digital banking system in the financial industry has prompted the government to create numerous avenues for SMEs to obtain the necessary financial assistance. Moreover, the adoption of digital banking would bring more convenience to the consumers, as well as a reduction in the operating costs incurred for both banks and financial institutions. Therefore, it will be prudent for all banks and financial institutions to embrace this system to create a more lively and secure financial environment. And with that, thank you all for watching.